Saving and investing are both important for financial well-being, but they serve different purposes. While both strategies aim to secure your financial future, they operate in distinct ways and are suited for different goals. Saving is setting aside money for short-term needs or emergencies. This could be for unexpected expenses like car repairs, medical bills, or even a sudden job loss. This money is typically kept in safe and easily accessible accounts like savings accounts or money market accounts. These accounts are designed to be liquid, meaning you can access your funds quickly when needed. These accounts offer low returns, but your principal is secure. The primary goal here is not to grow your money significantly, but to ensure it is available when you need it. Investing, on the other hand, involves putting your money to work in assets that have the potential to grow over time. This could include stocks, bonds, mutual funds, real estate, or other investment vehicles. You're aiming for long-term growth and wealth accumulation. The idea is to let your money grow and compound over the years, potentially leading to significant financial gains. Investing involves more risk than saving, but it also offers the potential for much higher returns. The value of your investments can fluctuate, and there is always the possibility of losing money. Think of saving like parking your money in a secure lot. It's safe, predictable, and you know exactly where it is. It's safe, and you can access it easily, but it won't earn much. The interest rates on savings accounts are generally low, often not even keeping up with inflation. Investing is like planting a seed. You plant it with the hope that it will grow into something much larger over time. It takes time, care, and some risk, but it has the potential to grow into a large tree. This tree can provide shade and fruit, symbolizing the financial benefits you can reap in the future. Understanding the difference between saving and investing is crucial. Knowing when to save and when to invest can help you achieve a balanced financial strategy. It's the foundation for making informed financial decisions. By understanding the risks and rewards associated with each, you can better plan for both your short-term and long-term financial goals. By saving for immediate needs and investing for the future, you create a solid plan for financial success. This dual approach ensures that you are prepared for emergencies while also working towards growing your wealth over time. Balancing these two strategies can lead to a more secure and prosperous financial future. Investing is essential for several key reasons. It's not just about putting your money into stocks or bonds, it's about securing your financial future and making your money work for you. One of the most important reasons to invest is combating inflation. Inflation is the gradual increase in prices over time, which means the value of money decreases. Inflation erodes the purchasing power of your money over time. For example, what you could buy with $100 10 years ago is much more than what you can buy with the same amount today. Simply saving money might not be enough to maintain your standard of living as prices rise. A savings account typically offers interest rates that are lower than the inflation rate, meaning your money loses value. Investing your money allows it to grow at a rate that can outpace inflation. By choosing the right investments, you can ensure that your money grows faster than the rate of inflation. This preserves and even increases your purchasing power over the long term. It means that your money will be worth more in the future, allowing you to buy more goods and services. Another key reason to invest is to achieve your financial goals. Investing can help you reach milestones that might seem out of reach with just savings. Whether it's buying a house, funding your children's education, or even taking that dream vacation, investing can provide the financial boost you need. Or securing a comfortable retirement, investing can help you get there. Retirement might seem far away, but the sooner you start, the better off you'll be. Investing can help you achieve these dreams and more. It's about creating a future where you have the financial freedom to do what you want. The earlier you start investing, the more time your money has to grow thanks to the power of compounding. Compounding is one of the most powerful tools in investing. Compounding is the snowball effect of earning returns on your initial investment and then earning returns on those returns. Over time, this can lead to exponential growth. Over time, even small contributions can grow significantly. By consistently investing, you can build a substantial portfolio that helps you achieve your financial goals and dreams. Remember, investing is not just for the wealthy. Anyone can start investing with small amounts and gradually build their wealth. It's about making informed decisions and staying committed to your financial plan. Educate yourself, seek advice from financial experts, and stay informed about market trends. The more you know, the better your investment decisions will be. Investing is a journey that requires patience and discipline, but the rewards can be life-changing. Start today and take control of your financial future.